Hello and welcome to BloombergQuint. You are watching BQ Conversations with Promeet Ghosh, Deputy Head India for TEMASEK. Promeet, welcome to BloombergQuint. Let me begin with the basic performance of your portfolio this year. You gave a return of nearly 25%. Give us an idea of how did you manage the disruption that we saw, because 2021 was a big disruptive year for most of the countries and most of the investors as well, right?
Yeah. Hi, Sujit. Good to see you again, and thanks for having me. Yeah, as you said, our TSR this year was at close to 25%. It has been a interesting year by all accounts, uh, and as a consequence of COVID across various parts of the world. Uh, there was a considerable degree of disruption that businesses saw. Having said that, I think over a period of time, companies have managed to deal with the consequences of COVID. They have strengthened their business approach. They have strengthened their balance sheets. And markets, for their own part, have also seen how some of these are playing out, and therefore, as you know, have come back quite strongly in various parts of the world. So, insofar as India is concerned, what we have seen is that there have been two important underlying trends. One trend has been one of consolidation, and the other one has been of formalization. These trends are ones that we had identified some time ago, together with global trends of digitization and a move towards more sustainable living, which is ESG, etc. So now, what we have seen in the recent past is that as these trends have actually been accentuated, uh, you know, in as a consequence of COVID. Since we had identified some of these trends early, I'd say that the portfolio construction, the way that we've constructed our portfolio has indeed, therefore, been quite resilient.
You know, I was seeing your portfolio also. It's an interesting set of portfolio, and and since I've been interacting with you for over years, I've seen more than a large portion of it now moving towards digital properties or digital platforms who are providing more of a consolidated services to across verticals, which is happening. How would you say that what percentage of your portfolio would be digital and what would be traditional brick and mortar?
Sajid, to be fair, I won't be able to comment on what the split there is, but I do want to emphasize that it's not a new trend. It's not a new trend for Temasek globally, and indeed, it's not new for Temasek in India. In fact, we in India have had somewhat of a barbell strategy, if you will, that we've adopted for some time. We have, on one hand, a portfolio of uh, mature or relatively mature companies, which may both be listed or as well as unlisted. And at the same time, we started investing in early stage companies 7, 8 years ago. So our investments in BuildDesk and Pine Labs and Policy Bazaar and Cartrade are long-standing investments. They are not recent. We have continued to follow, over a period of years, because we are actually great believers, as I said earlier, in the trend towards increasing technology adoption in digitization and what that does to marketplaces, to the delivery of services and goods, etc. Yeah, what is happening is that many of these companies which we invested in earlier and have continued to invest in, are now coming to a point where they are much more mature and uh, uh, potentially even like Zomato, potentially IPO candidates.
You know,
But
uh, before I come to those entire startup ecosystem, uh,
okay.
you spoke about the fact that last year was more of a consolidation, accentuation of consolidation and formalization, which was happening. Uh, did you see some gaps on valuation as well? Because did you see valuation correcting itself because startups were finding it difficult to get financing, and so it became easier to fund some of the prominent or prospective startups, or did you see valuation remaining intact for some of those companies, but those who couldn't, they just fell off the radar?
If you're asking particularly about about the startup universe
Yeah,
and their
yeah.
valuations, uh, to be fair, Sajid, many of the companies that we have invested in, they are quite well funded, quite well funded. So very few exceptions. So they're very well funded. They were in a position to deal with the impact of of COVID. I have to say quite smartly. There were a few situations where the companies, repivoted their business models as a consequence of this. But at least we have not seen the COVID. COVID wave as this once in a lifetime opportunity of suddenly finding distressed companies. No, our investments in this space have continued apace. And by the fact that you can see from the portfolio that we have, many of these companies have done quite well in their individual spaces. So, it's not been one of picking out distressed companies.
Let me come to the digital landscape here, because we are now seeing maturing of the digital landscape. Startups now matured enough in valuation as well as in scale to go to public markets. We saw Zomato IPO open and it's doing very well. It's all oversubscribed already, and you're one of the investors in it. How do you see the startup maturity phase now going through? Was COVID a big factor to push them through the edge of formalization and consolidation and get them mature for this thing ahead, or it was a natural progression for many of the? Will it be a natural progression for many of the startup companies?
What COVID did to the environment, I believe has been helpful to many of these companies. There was a far greater acceptance of technology-led solutions, as we all know. Right? Be that home delivery of food, be that online transactions, online marketplaces, etc. So to that extent, there was they benefited from this. I the key. There are two things that we look for when we invest in a startup. Two things at the essence. One is management, right? And two is the TAM. Those are key issues that you focus on. And needless to say, this is a business in which you have to be very alert to changes in the marketplace, to competitive dynamics, and so on and so forth. And therefore, managements. I think many of these managements have therefore been very nimble, which has enabled them to emerge stronger from the COVID thing. But as a general matter, I think there has been a maturing of these companies over a period of time as they have met with various challenges and have gotten over them. What we are now seeing is that they are now at a point where they can be IPO'd in the Indian market. It's also unusual for the Indian market to be accepting of these business models. So it is not only a maturing of the companies, but also a maturing of the markets. There are two things happening here, right?
So basically, COVID has allowed you to accept these companies as it is, right? That's what you're also saying.
Yeah, and also that some of these companies are possibly much larger part of your lives than they were earlier. So that may be translating into a better acceptance in public markets. I don't know, but you kind of it follows, right? That people have become much more accepting of and understanding of technology-led solutions.
How do you look at the valuations for these companies, right? Zomato coming at valuation of nearly $8 billion in the market. 3 months back, it was at $5.5 billion. Within 3 months, the valuation at IPO, public IPO, is around 8 billion. And it will debut at 10 billion when it lists in in the next few days. How do you value these companies? What should investors look at it? And as an institutional investor who have looked at these models, how should a retail investor or a genuine investor look at these companies and follow them? Because traditionally we follow the brick and mortar companies, look at cash flows, we look at profitability year on year or revenue growth year on year, and we try to give valuation to that. But these digital companies don't work on some similar models. So how do you look at it?
Yeah, I'm not going to be able to tell how other investors can look at it or should
No,
look
I
at it.
want you to tell me because you're one of the largest institutional investors.
Exactly. So I can give you a sense of how we look at it. Like I said, two important things to begin with: managements and TAMs, but also we are long-term investors, right? What we look at is, yes, the valuation today is important, but at the end of the day, what you have to look into you have to prognosticate into the future and say, what 5 years down the line, 6 years down the line, what is this going to look like? What's the business going to span? And then once you've got a sense of that, then you say, okay, in that context, is the valuation that is being paid for today fair or not? And we do know that, particularly in technology-led businesses, given the digitization trend of across the world, that companies can have discontinuous, paths going forward. So, not for me to, preach to anybody, but I do think that today, just as it was for us in the past, when there are earlier stage companies, there is a lot of uncertainty. But again, you've got to bet on managements being able to realize the true potential that can come out of a very interesting TAM. And if you look at that and you work backward from a very bottom-up approach, and say this is what the company can potentially be doing, you have to look at the valuation in that context.
At what time do you think that you should look at cash flows for these companies? Because at some point in time, the investors would want to look at, right? It couldn't be an unending infusion of equity into the companies of this nature. They will be holding cash now because of raising funds. But at some point in time, investors would say that, okay, I want to see more cash flows coming from your operations. So what should be the time frame for an investor to hold these companies to see with them mature to get cash flows coming in?
There are a few things that I think people have to think about in the revised context of some of these newer companies. In brick and mortar companies, you could argue that there are a lot of investments that were made into plant, machinery, etc. In newer age companies, the investment is into technologies, into acquiring customers. right? One may look like a revenue investment, the other may look like a capital investment. But really, you have to think what is creating a long-term sustainable value in this business. Eventually, what you have to look forward and see, is this a sustainable business model or not? Is this a business model which differentiates itself from others in that space? Those are critical focus that you have to look at. I mean, there are innumerable examples, and you will know this better than I, that there are companies globally which from a cash flow model have continued to invest cash every year, net cash use, but are very, very large companies today. And I think the markets have felt comfortable, one, in supplying them with the cash, and two, in valuing them very well, is because they think that the business that they have is, has very strong entry barriers, right? That they've built up a position which is, in some ways, unassailable in their respective businesses. So I would not reduce it simply to a question of when is cash coming, not coming, because you have to think through some of these, in a evolving context.
So tell me one thing about when you say entry barriers. It's a technology platform at the end of the day, if you look at simply, and a technology platform can be disrupted by another technology platform coming in tomorrow, maybe a much better model than the current model which is there. So in that sense, do you still see that as an entry barrier, or is it because you now cater to a customer base and scaling up to that customer base becomes its entry barrier?
Of course, the technology can change. But what you have to think about is, as technology evolves, do you think that there will be as we stand today? What's our view of what kind of technology challenges can be there, and you have to factor it in. You have to also factor in how strong their ownership of customers is, and that how easy or difficult it is going to be for some other technology to come and supplant you, and to be able to take away your customers. So all of these will contribute to building up a resilient and robust business. These concepts are not new, right? But we just have to kind of keep calibrating them as we go along.
Zomato is the first case here. We'll soon have Paytm coming in, and maybe Policy Bazaar from your end, which is also slated to come for an IPO. PharmEasy is another one which is expected to come out with an IPO sometime this year or next year. Do you see the market now mature enough to look at these companies and say, okay, these are part of my regular ecosystem, and so there is a sustainability which is there, because I would need them on a daily basis or weekly basis. I go to them much often than I go to maybe a normal store, and so there is a maturity which has come in for investors to also accept these kind of companies.
I hope so. I do hope so. And these IPO, the fact that these IPOs are being talked about, and it would appear that there's a market appetite. It would appear that the market's maturing. Well, finally how they do, etc., we'll have to see. But I think people have come to see, exactly as you say, that these companies are a part of our lives, just as other companies have been in the past, and they think, therefore, there's an inherent understanding, therefore, that there's potentially value in them.
What about the merger between the traditional and the online tech platform kind of thing? We saw this happening in PharmEasy and ThyroCare, and you are invested there as well at the holding company level. Do you see more of that kind of consolidation happening in this space, where online tech platforms will take up traditional companies and maybe scale it a multifold because of technology platform they have?
Yes, it's a global trend. that they have been combinations between older more brick and mortar companies and technology platforms, and there is value to be had by combining those two. So yes, I do think that we will see more of those in India.
Okay. In the payment and financial services space, you have also good exposure to traditional and online, where Pine Labs is one of them, which you have invested in. How do you see the traditional players coping up with this challenge of tech platforms, techs coming in and challenging their existence? Let me put it this way.
They are all evolving, right? They are all evolving. They are all looking at how they themselves can quickly, quickly digitize their own processes, their own go-to-market, and so there's lots that's going to happen. For instance, I see banks as being at the forefront of it as well. We are seeing some banks being extremely nimble in changing how they do business. So very interesting times, and we'll see how this goes. But certainly, everybody, especially the well-run companies, are all well aware of the challenges as well as the opportunities that the market's throwing up.
Tell me one thing about traditional model. You tried your hand into the NBFC thing in India with Fullerton, and then you sold it off recently. What kind of challenges you see on ground for some of the companies like like the one where you are invested in?
Insofar as Fullerton is concerned, as you're aware, Fullerton is an investment made by Fullerton Financial Holdings, and the decision to invest and now recently divest after, I think, 15, 17 years is of course driven by their board of directors, not by TEMASEK. But Sajid, suffice it to say that financial services has been a strong area of interest to us. In fact, it's the largest area of investment for us. It's something that we have continued to grow over a long period of time. It's one that we have diversified significantly. You remember back in the day, we used to have only one or two banks, but we've grown our exposure to banks. We've also grown our exposure to life insurance, to fintech, we've invested in NBFCs, etc. So it's I think we are in no doubt about the percent potential in that segment. Insofar as NBFCs are concerned, NBFCs perform a very important function in the Indian financial markets. They access customers that others cannot necessarily reach, and therefore it's an area that we certainly think is one of abiding interest for us.
And do you see tech platforms now coming and taking over those NBFCs as well, in the sense from operational point of view, scale up point of view? Is there a chance that the tech platforms can disrupt the NBFC model in some way? We're seeing Bajaj Finance doing it very well, but others?
Yeah, so that's the thing, right? Technology is evolving. There are two core trends that we see across the world, right? One is digitization, and the other is the future of consumer. Now, digitization, it will be done by fintechs. It will be done by existing incumbents, right? Everybody is going to evolve, exactly like you said. Bajaj is doing and evolving. So look, who will finally come out the winners depends on who is nimble enough and who is thoughtful enough and who has the management depth to be able to do it. But fascinating how this is playing out, right?
What about EDUTECH? Because you've taken a stake in Upgrade. How do you see that going forward? We saw last year what technology can do to education. All schools are on online. Everything is there, but replacing traditional schools and merging it with edutech. How do you see that playing out?
You know, is there potential in online learning? The answer is a resounding yes, right? I mean, we've just learned how much can be done in that space. Does that necessarily mean that traditional schools will disappear and they'll all be replaced by online classes? No, I don't think we should approach it from that basis. But is there space for disseminating knowledge through the online using online technologies? Of course, and that's the upgrade is a example of that. Our belief in that in the future of what will be an important channel for imparting education and disseminating knowledge.
So my question is that okay, you have upgrade which is providing that kind of services, but in the last 1 year we have seen schools taking up the same job which upgrade is doing it, and so it's not one upgrade, it's thousands of upgrades school wise which are doing it. So it's suddenly become a crowded market in that sense, because you have the online training which is happening, students are participating in it, or modules being set up for them, everything. So suddenly, have you seen this models much more faster, growing much more faster, and uh, now the ultimate value add for a edutech company would be to go through schools or tie up with schools and scale it up. Is that the way to go forward?
Look, again, it's the same thing we've been saying, Sajid, that as technology evolves, you will see more traditional players adopting technology to deliver their product. Not only expand their ambit of their service offering, but also strengthen their core offering, right? And similarly, there'll be other people who will come into that space, and some of them, as we said earlier, may combine with brick and mortar businesses to strengthen their service offering. Make sure that they are much more widely, whatever their reach increases. This is the way that it's going to go. Across businesses, not only in education, across every business, we will see this happening. If you're asking me why we are investing in a particular company, we do believe that there are, like I've said, that these companies can create over a period of time a very defensible business model, that there's a large TAM, and that they will be able to create a strong business. That may include in the future, some part big motor, that may not, but that stuff we'll have to kind of see as it comes along, right?
Green technology is another thing where you are investing in EVs, electric vehicles. Ola is one of them where you have invested recently as well. But I see in your portfolio you have Ola as well, you have Maruti as well there, and both are different in their size. They have scales and other stuff. How do you see this space evolving over a period of time? We have big players coming into the market with EV as plans, electric vehicles coming into the market, and maybe 5 years to 6 years down the line, we'll have a more vibrant EV market coming in as well. But as we look at today, what is the path you see for these kind of companies?
Well, good question, Sajid. Very good question. Let me just give you some context here. As you said, ESG is a very important cornerstone of investing for Temasek. And we've been reiterating this for some time, right? We ourselves have actually taken on very, very key pledges in this journey ourselves, right? So a couple of years ago, as an organization, we became carbon neutral. What we are now saying is by 2030, on a allocated portfolio basis, we will halve carbon emissions by 2030. And you can imagine this is a $281 billion portfolio, right?
Yeah.
Not a small portfolio. So we will halve emissions by carbon emissions by 2030, and by 2050 we will be net carbon neutral on a portfolio basis, right? Now, what does that do to our investment approach today? There's three problems, and I'll answer your question as a part of that. Firstly, we are investing in ESG aligned themes, right? So it may be in various companies globally. You have O2, which is in solar power, etc. in India. Clearly aligned ESG. Secondly, we are investing in companies, and our current portfolio companies, we are helping them evolve and helping bring them knowledge and learnings in order for them to go on this journey to reduce carbon emissions. Right? So helping our portfolio companies, engaging with them to reduce carbon emissions. And third, we are investing in technologies, evolving technologies, which are contributing towards reducing carbon in the atmosphere, carbon dioxide in the atmosphere. Okay, so as you probably know already, we have set aside $600 million together with BlackRock to invest in these newer technologies. Some of these technologies basically are low-tech technologies, are cheap technologies which just absorb carbon from the atmosphere. Right? We have invested together with the DBS and Standard Chartered Bank in setting up a carbon credit exchange, because we think that will again help companies in that journey. So to answer your point, this is at the core of, this is important cornerstone of how we are approaching business, and we will continue to invest therefore in one, whether it's EV electronic vehicles, or it may be vegetable proteins in some other context. Some other context in other parts of the world, but also helping, and investing in companies which are evolving towards in this journey, right? So if there are companies which, they are where they are today, but the journey is important to us. Where are they going to get to in the future? For instance, in auto companies, what's their EV plan, etc.? What's the technology that they are investing in? So those are things that we are watching out for, and certainly you'll see a lot of this focus from Temasek.
So how do you put Ola and Maruti in this basket then? I can understand where Ola would be, but how does Maruti fare in this?
See, again, I don't want to specifically talk about companies, but like I said, we are looking at the journey that these companies are going to be. Who is tomorrow going to be the driver of the evolution towards electronic vehicles in India? How's that going to happen? Who's going to be at the forefront of that? That can't happen out of thin air, right? So, what are the drivers going to be? So some of these are. So I like I said, it's not really fair for me to specifically call out companies, but I think our thinking will give you a sense.
So is it fair to say that Temasek will not be investing in carbon emitting companies, or in the future is only companies which have a traditional roadmap towards carbon neutrality and green ESG is something which would be the focus of the fund?
So yes. So the answer is that is Temasek not going to invest in companies which are carbon emitting? That's not accurate. But as an underpinning to any investments that we make, the journey that those companies have will be very important.
Okay. Promit, we've taken a lot of your time today. It was a pleasure talking to you. Thank you very much for joining us on Bloomberg.
As always, Sajid, as always. Good talking to you. Bye-bye.
Good talking. Bye. Thank you.